Greetings again, Robert Schein, Managing Director and Partner with Blanke Schein Wealth Management. Well, today is Friday, May 1st. We have one big subject matter to discuss. It's the unemployment rate. We just topped 30 million unemployed in the United States. It's absolutely tragic. Our heart goes out to those that are affected by this. But I wanted to show the unemployment rate today in the chart of the week. Go down below or within this email and you'll see the chart that's attached that I'm referring to and referencing from our partners at First Trust. But essentially, the chart is the unemployment rate as it peaks relative to the performance of stocks. In this case, we're going to look at the S&P 500. So I hope you have an opportunity to actually study the chart enclosed within a little closer. But the take-home point is that when unemployment in the last 70 plus years, has peaked in a sense, so 10 times over those 72 years since 1948. Ultimately we have seen it's the worst in terms of headlines. It's the worst in terms of the economy through recessions and depressions. It's never easy to live through that pain and go through that. Ultimately, the market sees a brighter day. It sees through sort of the economic hardship and really looks towards the next year as it relates to the economy recovering. And ultimately, the economies over the last 72 plus years have recovered. And in fact, they've thrived, and economies have gone to ultimately new highs, and as well as the U.S. stock market. So if we look at the S&P 500 and say to ourselves, 1 year from the peak of unemployment, what was the average rate of return over that past 70 plus years? And you might be shocked to find that the average rate of return was 16.9% on the S&P. Well, what about the 2-year rate of return? 2-year rate of return is 20.3%. So again, the market looks through. This is sort of historical proof that the market actually looks through when unemployment's at its worst, and it says, you know what, there are some things in place, monetary and fiscal policies at play, and businesses working together to sort of get to a better day. So we will get to a better day, economically speaking, as well as the unemployment rate. In the meantime, this is what the historical data has shown us. Markets in themselves sort of see through the economic information. Economic information we know is going to be pretty bad for the next couple of months and quarters ahead. So just brace yourself, but know that when the market sees sort of the headlines of the day, it's looking a lot further into the future. So enjoy your weekend, stay healthy and stay safe, and God bless. Thanks for listening.